Let's now shift focus to our newsmaker of the day, and that has to be Coal India. Well, late last night, labour unions called off their strike after receiving assurance from Coal Minister Piyush Goyal that closure of mines will not affect workers and the safety and security of all mine workers was important to the government. The stock has reacted positively in trade today. It's up about 1.5%. It was doing a little better than that earlier. But the important question now that we're asking is whether this is the end of troubles for the public sector giant. Can it deliver a significantly better output going ahead? Remember, the minister himself has said that he thinks a production of 1 billion tons, that's on a gross basis, is possible by the year 2019. Joining us to answer those questions is former chairman of Coal India, Partha Bhattacharya. Mr. Bhattacharya, good afternoon. Thank you very much for joining us. There was some concern yesterday that there could be a serious impact on production because of the strike. Sorry, if it got extended. But thankfully, so it seems consensus has been found. The strike's been called off. Where and how do you see Coal India positioned today now to take care of the needs of an economy that's hopefully on the recovery path?
Well, you see, if you look at the performance of the Q3 for Coal India, I think it has produced a stellar kind of a performance, growth of something like 13% in production, which has led to year till date, that means April to December growth of more than 7%. That is something Coal India has never achieved. So it's all possible. It's all possible with concerted action and help from the government, help in terms of faster clearances, environmental and project clearances. Things are possible. That has been demonstrated. So
you're saying that a 1 billion ton gross output target is doable by 2019? Given that we're at half that level, if at all, in FY15?
I'm not saying that at all. What I'm saying is a much higher growth rate than what has been achieved by Coal India in recent years is possible, provided there is an all-round help, concerted help from the Government of India, various ministries, Ministry of Environment, Forest, Ministry of Coal.
And more importantly, sir, railway infrastructure.
Railway infrastructure and also the state governments. You see, the states where the coal deposits are there and coal mines are there, the states need to help in terms of land acquisition and these kind of things. So with all kind of concerted action at every level, Coal India can definitely improve production. That has been demonstrated in Q3. And more is possible in the coming years. Now, whether that leads to 1 billion ton in 2019 is a matter of detailed calculations, and I am not really so much deeply involved into the whole process that I can tell you that. But substantially higher growth is possible, that is what I can say.
Mr. Bhattacharya, hi, good afternoon. What's your call on the e-auction process? Because last year the company had record margins from e-auction. There's a report that this time around there could be a cap on e-auctions. What's your take on that?
Yeah, a cap on e-auction had to be introduced because the supply to the power stations were falling short of the target. So, you see, power is definitely a priority, and Coal India will have to dispatch enough quantity as per the fuel supply agreement to the power stations and then only turn to e-auction. But at the same time, cap on e-auction can at times create a problem in terms of faster evacuation. Because even this year, while Coal India has achieved a more than 7% growth in production, the growth in dispatch is limited to around 4%. So e-auction sometimes may come in may help the growth in evacuation. And to that extent, the cap should not be imposed, as a completely like an iron clad, should not be that like that. But generally, the principle should be that Coal India should first aim to meet the FSA commitments to the power stations, and e-auction quantity should not be such as to interfere in that process.
Our understanding, sir, is that Coal India earns more via the e-auction route than the FSA supply route. So not only is it an impact on dispatch, but it's also an impact on profitability if the e-auction supplies are capped, right?
See, after all, it is the nation's coal producer. You don't have anybody other than Coal India to meet country's coal demand. And the biggest coal demand is from the power sector. So, and Coal India in any case is a profitable organization. So lesser profit and more profit is fine. But more important than that, the power sector must receive its coal and produce power, isn't it?
But wouldn't you say the profitability of Coal India has been on the decline, sir?
Well, if the e-auction quantity falls, then the year in which the fall takes place, there could be some decline in profitability. But in subsequent year, when the e-auction quantity remains capped at the same level, the profitability decline should not take place.
We've already seen a profitability decline in the second quarter of this fiscal, sir. I mean, I'm not connecting this necessarily just to the e-auction cap. But I'm saying that from what I understand, margins have come down substantially from 18% levels to 13% levels. So profitability is already an area of concern for Coal India, especially since the government wants to divest 10% in the company. While I understand that the power supply in this country is a priority area, we're talking about Coal India and its finances. So I'm just curious to know what your assessment is of what that aspect looks like here on.
You see, that is not a very big problem to tackle. There are two things. First of all, if the production growth happens at a much faster pace, then that is going to give additional contribution. You see, production growth of 10 million ton, growth of 40 million ton is a very different impact on financial profitability. That is for sure. That is number one. And number two, if it needs a price adjustment for the fall in quantity of e-auction, a general price adjustment can be worked out.
But you're also discounting, sir, in this the overall global fall in coal prices that has taken place over the course of the last several months?
Even with the global fall in coal prices, Coal India prices are still cheaper than the international prices after adjusting for quality. So there is still a scope.
Okay. Mr. Bhattacharya, as a former chairman, do you think it's the right time to go for the divestment of Coal India stake? And do you think there would be enough appetite for Coal India right now?
That, you see, that will depend upon dipstick studies with the global investors, and which can be done at any point in time. I'm not very sure whether this is the right point in time to go for a divestment, because I think some more improvement in production, productivity, profitability, etc. has to happen before the divestment takes place. And with a track record of declining profitability, divestment is not the right time.
Okay, you believe the stock, even after the rally that we've seen, the company is still undervalued?
Yeah, I think so, because you see, company must first of all reverse the trend of decline in profitability. That can happen in the manner in which I've just mentioned. Once that is done and that is established, then only the divestment should take place.
So what
to get proper value.
Okay, I'm going to go back to the profitability question just to get a sense, and I know that the current numbers would not be with you, sir, but since you have such insight into the company, just give us a sense of how you're assessing this increase in output versus the decline in prices and therefore the impact on profitability. So what kind of profit growth would you expect to see Coal India do over the next couple of years, keeping both of these key factors into account?
See, if the Coal India's production grows by, let us say, 10% per annum.
And it grew by 7% the last quarter is what you were pointing out, right, sir?
Yeah, it grew by 7%.
So 10% is not...
It grew by 13% in the last quarter.
13%. So 10% is not an unrealistic expectation is what you're saying.
10% is not an unrealistic expectation, certainly.
Yeah.
And in case it has to do 1 billion ton, then the growth has to be 20%.
Yes, of course.
So if I consider a modest rate of 10%, in that case, you see, at an inflation of 5 to 6% or even less now, there will be a decline in the real cost of production actually.
Okay.
See, so the cost, because the cost is largely fixed in nature. There's hardly any variable cost.
Sure.
So with volume growth, the cost per ton comes down very fast. So if there is a 10% growth in coal production with not much of investments, existing investments giving rise to that kind of a growth with better efficiency and better performance, better equipment utilization and things like that, then the cost per ton actually will come down by 4 to 5%. If that happens, the margin goes up straight away.
I know, but sir, we have to keep into account both falling global prices as well as lower realizations because of, less e-auction supply and more FSA supply.
What I'm trying to say is that even with global prices coming down, the coal price in India is much lesser. So therefore, I am not anticipating a drop in realization because of global prices. So let the realization remain where it is.
Okay.
So in that situation, there will be a cost decrease. Unit cost of production will come down by 3 to 4% or 5% even if the growth rate moves up to 10%. So what you have seen, this 13% profitability, that moves up to 18%.
So you're expecting a restoration. You're expecting a restoration of margins to 18% if they are able to meet a production increase of 10%, let's say this fiscal and in continuing fiscals from here on.
That is exactly what I'm trying to say. And if there is a further, dose required of some increase in prices, some marginal increases, that also can be given to shore up the bottom line further. And once these things are done, then you go for a divestment, you'll get a much better price.
Okay, sir, I think the final question I have on my end is has to do with the coal ordinance and the fact that, eventually this government is of the intent to allow for commercial mining of coal. It may not happen tomorrow, next week, next month or next year, but it is on the anvil. How would you assess the impact on Coal India?
You see, to my mind, this is going to actually favorably impact Coal India.
Why is that?
Because Coal India today doesn't have any benchmark for assessing its own performance within the country.
Okay.
So therefore, there is definitely a reason for complacence. And we are all aware that global standards, as far as equipment utilization is concerned, as far as environmental management is concerned, are now becoming much better. So it is better to have those practices come in, but at the same time we must ensure that the best of the world come in into the commercial mining, and so best standards are set up. That also answers the trade unions' concern that they will pay wages of 7,000, 8,000, whereas Coal India pays 40,000. So Coal India's coal will become uncompetitive and all that. So that also gets removed if global players come in. In that kind of a situation, we have the best practices in mining, we have the best practices in environment management, we have best practices in coal beneficiation and washing, coal quality. All these standards will come in. And then Coal India will be somewhat compelled by market forces to emulate all that. So, there will be overall efficiency improvement everywhere. And that is what is desirable, that is what should happen. And that is also change this present shortage situation into abundance within the least possible time frame. So commercial mining with induction of the best players of the world is a necessity.
All right. Let's hope that's exactly how it turns out. Mr. Bhattacharya, appreciate you joining us this afternoon with your thoughts on the future for Coal India.